So that is our big number today, and that is the hit that NVIDIA reckons it's going to take first quarter from tighter U.S. chip export restrictions there. And Sherry, you know, the thing is, the NVIDIA filing was overnight, but the government actually told NVIDIA on April the 9th. And, you know, the way I look at it, this is probably the strongest sign so far of just how NVIDIA's explosive growth could be slowed by these tighter and tighter export restrictions.
Yeah, so it's really unfortunate timing as well, really coincidental. AI CapEx questions and then tariff war happening at the same time. And of course, these chip restrictions really making things difficult and really leading to extra cost. But I do want to get into this particular chip that we're talking about here. So NVIDIA is taking $5.5 billion sales hit as U.S. is regulating sales of H20 chips. This was downgraded AI chip. It's not so advanced as the others on this blacklist. So this was really the window, and the Trump administration is closing that loophole at the moment. So I think the Trump administration is sending some kind of a message that we're not going to be lenient. Nobody is off the hook.
Yeah, indeed, Sherry. And, you know, this just gets, the news sort of gets just tighter and tighter around NVIDIA, right? Because the H20, as you pointed out, was, they came up with that in response to export restrictions, which took effect back in October 23. And the easiest way to think of this is sort of like, it's H100 Lite, right? And it's the H20 chips which are tailor-made for China for these export controls. And it happens to be the same chips that actually made it to DeepSeek and allowed them to do what they did.
Yeah, and, you know, something that I do want to point out here. So this is just a rumor that this hedge fund portfolio manager was talking about. So he watches the memory space very closely, and he was telling me just 2 days ago that H2 chips was something that China wanted to ban from importing into China. That is quite interesting because that means companies in China, companies like Huawei, for example, must have made some meaningful progress for them to make a decision like that. It's not official, it's just a rumor, but there is something out there in the memory space that is, of course, playing out here. So quite interesting. So is it really closing the loophole and sending a strong message? Or are they coming out with yet another restriction, but it may not really hurt Beijing as much?
Don't know, yeah, but I mean, the point about Huawei is interesting and well taken, Sherry. Jensen Huang, NVIDIA's boss, has mentioned Huawei explicitly and publicly as a competitor a couple of times now.
Over the next 4 years, chipmaker NVIDIA plans to produce up to $500 billion worth of AI supercomputers in the U.S. As it works with international manufacturing partners to set up and run cutting-edge production facilities, the project is reportedly the first time the company's AI infrastructure will be entirely created in the U.S. Jensen Huang, the founder and CEO of NVIDIA, stated, "For the first time, the engines of the global AI infrastructure are being constructed in the United States. Adding American manufacturing improves our supply chain, increases our resilience, and helps us better satisfy the amazing and expanding demand for AI chips and supercomputers." The business has put more than 1 million square feet of manufacturing space into operation in collaboration with Siliconware Precision Industries, Foxconn, Wistron, Amkor Technology, and Taiwan Semiconductor Manufacturing Company, TSMC. NVIDIA's newest AI technology, like as the recently released Blackwell chips, will be designed, produced, assembled, and tested in these locations. NVIDIA's Blackwell chips are now being produced by TSMC at its fabrication facilities in Phoenix, Arizona. At the same time, Texas is developing supercomputer manufacturing facilities, with Foxconn spearheading operations in Houston and Wistron in Dallas. Within the next 12 to 15 months, mass manufacturing is expected to start at these Texas locations. NVIDIA is improving its testing and packaging skills in addition to chip production. Amkor and Spill will manage these procedures in Arizona, meeting the intricate needs of the production of AI chips and supercomputers. The corporation anticipates significant economic gains in the United States as a result of the shift. Over the next few decades, the chipmaker estimates that building a domestic supply chain for AI supercomputers will boost the resilience of the nation's vital technology infrastructure and generate hundreds of thousands of new jobs. Additionally, the company intends to use its technologies, such as the Isaac GR00T robotics platform and NVIDIA Omniverse, to automate production processes and optimize facility architecture. Digital twins of factories and robotics-assisted activities will be made possible by these instruments. The infrastructure created is meant to accommodate what NVIDIA calls AI factories, data centers built especially to handle workloads related to artificial intelligence. In the near future, tens of these gigawatt-scale facilities are anticipated to be built, serving as the foundation for an expanding AI-driven sector. Reports about NVIDIA's intentions to purchase Lepton AI, a business that specializes in leasing servers with NVIDIA's AI hardware, first appeared in March 2025. Verdict, a company owned by Global Data, was the original creator and publisher of the article, NVIDIA to produce up to $500 billion worth of AI supercomputers. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
The best part is that you have sort of feelers out everywhere. You have a team that is working hard. You're doing channel checks. You're meeting with folks. What is the vibe on tech? Because people love tech, and it drove the rallies in the years past, and everybody's looking to tech to do it again.
Yeah, I mean, the near-term turbulence is real. I keep using the word whipsaw, Nicole. We get one post from the Trump administration that says export tariffs are off and everything's good, and then you see tech rallying over the weekend, and you see another one, it's like, nope, kind of just kidding. Tariffs are partially on. Tech is strong, Nicole, and tech will be strong again. It's a deflationary force. So I'm talking to a lot of CEOs on the street. I've talked to a number of them from both big cap, mid cap, and they are very uncertain of how to proceed.
Right.
But all of them do understand how deflationary technology is going to be. So they're under a ton of pressure to be able to deliver AI, because AI is going to be what takes the cost out. So if you're a CEO right now of a retailer, a CEO of a bank, you're thinking, am I hiring? Am I freezing costs? What am I doing? In the end, you're going to invest in tech because it's going to allow you to create scale and growth that you cannot do with big OpEx investments in human capital.
So with the NDX down 11% year to date, on the dips, are you buying? Do you recommend buying, whatever, the triple Qs, the NDX, the XLK, or specific names, Mag 7? Do you buy on those dips?
Yeah, what I did is I've been doing a bit of a deconstruction of the Mag 7, because in the tariff era, it's no longer one big group. So there's this big disconnect. And part of the Mag 7 really excites me. And if I'm an investor, what I'm thinking a lot about is which companies have high exposure to enterprises, because enterprises are going to be the most likely to continue to invest, especially enterprises that are strong. You and I actually chatted once about the CEO survey that we did. We talked to hundreds of CEOs. They're under major pressure in the next 2 years to implement AI to drive meaningful efficiency growth and also to drive the next wave of productivity. When you're in a moment like this where you have recessionary forces or fears of recession, what happens to these CEOs is they actually are going to look at, where do I continue to invest? Technology. Where do I slow down? People and big capital expenditures, unless you're the Mag 7. The other reason I like a name like Microsoft is because Microsoft has, high enterprise revenue streams, very little consumer exposure, and they're already committing to their long-term CapEx, which basically says we're going to use our long-term operating leverage to put ourselves in a better position coming out of this downforce, because we know this is temporary, Nicole. I don't really care how much people want to debate the exact policy, the exact tariffs. What we do know for sure is that all these cycles come to an end. We're going to find our base, which is going to be certainty in whatever this is going to be.
Right.
And we will accelerate, and tech will be the fastest to come out of that.
So what tech names do you think could work better than others, let's say in the next 6 months?
Yeah,
you mentioned Microsoft.
I mentioned Microsoft. I still feel really positive about NVIDIA. The next couple of years, while there is a lot of catch-up being done, and I'll talk about Broadcom next, NVIDIA has the leadership in this particular space. They have the software, the frameworks, the stack, and you have the CapEx. The $325 billion of CapEx has been committed. We've gotten reaffirmations from Satya Nadella, reaffirmations from Sundar Pichai at Google. They're going down the path. They're going to continue to spend. Very little consumer exposure at NVIDIA based on that $100 billion of cash flow they're supposed to create over the next year.
And we see a lot of spending happening here. I mean, the Trump administration has been meeting with tech CEOs.
Yeah.
He's been really sort of saying, we started with that Stargate deal, trying to make sure that these companies are going to build more and more plants here. I mean, do you see more tech happening here? AI, can we be the leader?
It is happening. And look, one of the biggest things that I believe needs to happen out of this tariff war is going to be winning the AI front and winning the IP front. We talk a lot about handbags and stuff. I'm not sure we're going to actually screw the phones in here, and I'm not sure we're going to ever design the handbags and build them here in the United States. Having said that, we do need to control the IP. The TSMC risk, the Taiwan risk is palpable. We need to be able to make more chips here, and TSMC's committed dollars here.
Yeah.
Apple's committed dollars here. Yesterday, NVIDIA committed dollars here, and today we heard from AMD CEO Lisa Su, and she said they are going to build more of their AI here in the US. So it's like, while there's these kind of polar ends of how people politically feel about the situation, I do think this is the outcome the Trump administration wanted, is they wanted to see more AI being built here. And this is for our economic certainty, which is also our national security. So economic security, national security, very closely coupled, and AI is at the forefront of that right now.
Any investor may feel uneasy due to the recent market turbulence. When the value of your portfolio declines in tandem with the market, volatility can be frightening. It can be an opportunity for individuals who maintain composure and keep their attention on the underlying company. Some stocks have soared to nosebleed prices in the past 2 years due to the bull market. Although NVIDIA is a well-known brand, many investors could have thought they lost out as the price skyrocketed. Despite the recent market downturn, shares have risen by almost 400% in the last 3 years. Even while some people still think that the leader in artificial intelligence, AI, is pricey, there is solid evidence that this is an excellent moment to purchase NVIDIA stock. NVIDIA's business has some inherent protection, regardless of whether a trade war speeds up or if tariffs increase prices and impede economic growth. Its software stacks, AI GPU chips, and associated architecture are in great demand and will likely remain so for some time to come. The business is also in a great position to benefit from developments in driver assistance and robots. At a valuation it hasn't reached in over a year, investors can now board the NVIDIA train. Based on this year's profits prediction, market fear has caused the price-to-earnings (PE) ratio to drop below 25. As sales continue to rise, that valuation will become even more attractive if shares stay unchanged. However, investors can be left behind if they wait. If additional sales growth is fueled by new catalysts, investors will buy NVIDIA stock again. Now is the moment to start, even though it could be wise to average into the stock gradually during these erratic times. There is worry in the market right now. One of Warren Buffett's most well-known quotes is, "Be greedy when others are afraid." That recommendation should be applied to NVIDIA stock by investors as long as its value is strong. The motto that Wall Street has been using over the last 2 weeks is, "Buckle up and hold on." Some of the largest single session point increases and losses have been seen in the Dow Jones Industrial Average, S&P 500, and NASDAQ Composite. Since their foundings ever since President Donald Trump announced his Liberation Day tariffs. These extremely powerful companies have suffered during the recent sell-off, whereas the Magnificent Seven equities were in charge of pushing the overall market higher for over 2 years. For example, in the first week of January, NVIDIA, the artificial intelligence, AI unicorn on Wall Street, boasted a market valuation of around $4 trillion and momentarily overtook all other public companies as the largest in the world. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now let's dive into today's video. Any investor may feel uneasy due to the recent market turbulence. When the value of your portfolio declines in tandem with the market, volatility can be frightening. It can be an opportunity for individuals who maintain composure and keep their attention on the underlying company. Some stocks have soared to nosebleed prices in the past 2 years due to the bull market. Although NVIDIA is a well-known brand, many investors could have thought they lost out as the price skyrocketed. Despite the recent market downturn, shares have risen by almost 400% in the last 3 years. Even while some people still think that the leader in artificial intelligence, AI, is pricey, there is solid evidence that this is an excellent moment to purchase NVIDIA stock. NVIDIA's business has some inherent protection, regardless of whether a trade war speeds up or if tariffs increase prices and impede economic growth. Its software stacks, AI GPU chips, and associated architecture are in great demand and will likely remain so for some time to come. The business is also in a great position to benefit from developments in driver assistance and robots. At a valuation it hasn't reached in over a year, investors can now board the NVIDIA train. Based on this year's profits prediction, market fear has caused the price-to-earnings PE ratio to drop below 25. As sales continue to rise, that valuation will become even more attractive if shares stay unchanged. However, investors can be left behind if they wait. If additional sales growth is fueled by new catalysts, investors will buy NVIDIA stock again. Now is the moment to start, even though it could be wise to average into the stock gradually during these erratic times. There is worry in the market right now. One of Warren Buffett's most well-known quotes is, "Be greedy when others are afraid." That recommendation should be applied to NVIDIA stock by investors as long as its value is strong. The motto that Wall Street has been using over the last 2 weeks is, "Buckle up and hold on." Some of the largest single session point increases and losses have been seen in the Dow Jones Industrial Average, S&P 500, and NASDAQ Composite since their foundings ever since President Donald Trump announced his Liberation Day tariffs. These extremely powerful companies have suffered during the recent sell-off, whereas the Magnificent Seven equities were in charge of pushing the overall market higher for over 2 years. For example, in the first week of January, NVIDIA, the artificial intelligence, AI unicorn on Wall Street, boasted a market valuation of around $4 trillion and momentarily overtook all other public companies as the largest in the world. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now let's dive into today's video.
Pressure, all of the Magnificent Seven are negative so far this year, taking the brunt of the beating in the market as President Trump's trade policies rattle investors after 2 years of massive gains. Is this an opportunity for investors or a cause for concern? Joining me now, we've got John Belton. He's a portfolio manager at Gabelli Funds. John, good to see you. So what do investors need to know about the volatility in the tech sector that we've seen transpire to this point through the first quarter of the year?
Yeah, good to see you. So, I think that the starting point I'd begin with is every Mag 7 stock is lagging the S&P 500 year to date, which is sort of an interesting stat. So the Mag 7 has become the Lag 7 this year. I think a lot of the pain or the sell-off in a lot of these names started before a lot of the tariff concerns. There was a tech-specific negative catalyst earlier in the year when the Chinese AI model company DeepSeek released their new model, and we all know how that turned out for the sector. But a lot of these stocks have experienced a lot of pain so far. I think from here, I'm trying to stay focused on the long term. If we're talking about AI, I think a lot of the long-term fundamentals there remain very much intact. In fact, I think a lot of the recent news flow we've heard in that space has been quite positive. So I do think the fundamentals for these companies remain generally strong. And so, yeah, there's definitely some opportunities out there that are starting to emerge.
Okay, and so help us qualify what is a sound tech trade right now versus a weaker tech trade.
Well, I think so. If we're sticking with the Magnificent Seven, I think the mechanical impact of tariffs, given everything we know today, that's been priced in. I think what hasn't necessarily been priced in, or what we're really focused on now, is how does all this uncertainty around trade policy impact the macroeconomic outlook? How does it impact the consumer, and how does it impact business capital spending plans? And so I think across the Mag 7, there's a big range in how cyclical some of these business models are.
However, NVIDIA has lost 26% of its value as of April 11th, and as much as 36% as of April 8th after hitting its closing high on January 6th. Some investors may be quick to blame the uncertainties around President Trump's tariff decision for this setback. A succession of rising tariffs between the United States and China could prove problematic, even if Trump has given most countries a 90-day reprieve from greater reciprocal taxes. Despite not importing from China, NVIDIA's primary market by net sales is the second largest economy in the world. China may retaliate by rejecting NVIDIA's artificial intelligence chips. In the beginning, Trump's Liberation Day declaration also demanded increased tariffs on Taiwan, the location of the top chip manufacturer in the world, Taiwan Semiconductor Manufacturing. A major supplier of chip-on-wafer-on-substrate packaging technology that integrates the high-bandwidth memory required to power AI-accelerated data centers is Taiwan Semi, or TSMC as it is more well known. Fortunately, the president's announcement this past weekend guaranteed that reciprocal tariffs would not apply to semiconductors or chip equipment. Tariffs are an issue for NVIDIA, as is the uncertainty brought about by President Trump's changes to the tariffs' implementation dates and types. Tariffs, however, rank relatively low on the list of issues that present and potential NVIDIA shareholders should be concerned about. It is much more plausible that NVIDIA's stock is being weighed down by three other issues. 1. Competition within the company. For publicly traded companies, competition is almost always an issue. Despite holding the majority of the GPU market share in high-compute data centers at the moment, NVIDIA's Hopper H100 GPU and its successor Blackwell GPU design are not immune to increasing competition. The majority of investors are most likely concentrating on direct competitors from outside the company, such advanced micro devices. New generations of AMD's Instinct series AI accelerating processors are still being developed, and they are all noticeably less expensive than NVIDIA's AI technology. AMD's Instinct GPUs may be a better option for companies who don't want to stand in line for access to NVIDIA's AI hardware. However, NVIDIA faces an internal challenge that is more serious than AMD and its competitors. Members of the Magnificent Seven have placed several of NVIDIA's biggest GPU orders. The issue is that these titans of the business are also working on their own AI chips and/or solutions for their data centers. Although this in-house technology is much more affordable and more accessible, it is unlikely to outperform NVIDIA's in terms of processing speed. In other words, NVIDIA can keep releasing new AI GPUs every year, and yet lose out on important data center space to its own most valuable clients. Future orders and NVIDIA's already declining gross margin will suffer as a result. 2. The past. The potential for history to repeat itself on Wall Street is a second issue that is more concerning than tariffs. Investors have been captivated by the next big thing in technology or innovation for the majority of the last 3 decades. Pie-in-the-sky addressable market numbers linked to a potentially revolutionary technology or trend frequently attract investors. But since the introduction of the internet in the mid-1990s, every next big thing trend has met the same end: a bubble-bursting incident. The reason why high expectations are not fulfilled is that both professional and regular investors frequently overestimate how soon a new trend or technology will become widely accepted and/or acquire significant utility. There isn't much proof that companies are making a profit from their AI investments or have found out how to maximize their AI solutions, despite the fact that we have seen substantial enterprise expenditure on AI infrastructure. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.